emerging markets, and we seem to be narrowing that gap steadily. How do you see that impacting India?
So if you look at India's weightage in MSCI Emerging Market Index, in the last 4 to 5 years, we have seen its weight move from 7 to 8% to nearly 19.8% now. So we have, and that gives you an indication about the kind of momentum that our Indian market has seen, as a result of which its market cap has gone up, and the number of new companies that have come and added to that market cap, thereby increasing the number of shares or companies in the MSCI index as a whole. Also, the fact is that China has been going through a rough phase. At one point in time, China's share was around 40% in the emerging market index. Now it has fallen to nearly 24% odd. What some of the analysts are now expecting is that come November review that happens, India's weightage may go up to as much as 22-23%, and that would mean that if China continues to be underperforming the broader emerging markets, then India may be having the highest weightage within the emerging markets. The purpose of emerging market weightage and emerging market index is primarily because when foreigners invest money, they invest mostly through exchange traded funds or index benchmarked indices. MSCI being a foreign index contributor, it basically allows foreigners to benchmark their portfolio to the index. So if someone has say $100 million and if China has 24% index weightage, then of that 100 million, 24 million would be allocated for China, and 19.8% would be allocated to India, and then so and so to other countries which are part of the emerging market index. And that is an important thing, because as your weightage goes up, you have a higher share of incremental flows that comes into the emerging markets. Within the emerging market or within a particular country, you have sub indices which is there, like MSCI India index, which is there, where you have there again weightages are there for companies which are part of it, and that weightage foreign investors invest into those companies based on the weightage which is there. So it's like a tree structure. For foreign fund comes from the global market, which is the MSCI Global Index. There, India's weightage would be 7-8% or 9% or something, and from there it goes into emerging markets where India's weightage will be 19.8%, and within emerging markets you have MSCI India, where various companies will have weightages, and the flow of money goes into various sectors and companies accordingly.
All right. Now, the other news point that's coming out today, Sajeet, is that the MSCI also seems to have ignored the latest Hindenburg report and has decided to remove the freeze on the Adani stock. Tell us more.
So, this has been going on for some time, and MSCI has been talking about it, that it will review the freeze which it imposed last year in 2023 as a result of the Hindenburg episode, where a lot of volatility came into picture and they wanted more clarity on the liquidity of or free float of these of Adani Group companies. And so what they did was they froze the entire review process for Adani Group companies, which basically means that any corporate action or any fundraising or any impact that happens with respect to foreign inclusion or foreign investment holdings increasing in Adani Group companies will not be taken into into consideration, and it remains a standstill. Now what has happened in the August 2024 review is that they have now moved out of the freeze, and they have now adjusted the companies according to what is available with them. How does it help Adani Group companies? Because many of the companies are now raising funds. Recently, we saw Adani Energy Solutions raising nearly 8,500 crores, where we saw marquee investors or long-only investors coming and putting in money. So that increases the foreign float in the company, and as a result of that, weightage of Adani Energy Solutions goes up within the index. Adani Enterprises is also looking for a proposed QIP, qualified institutional placement, of up to $2.2 billion. That should happen in the next few weeks. When that happens, again, again it will be institution led, so you have mutual funds and you have foreign investors coming in again, and that would also increase the float of the company, free float of the company, but also it also brings in more foreign factor into the shareholding of Adani, and it will increase the weightage of that. So it's a shot in the arm for some of the Adani group companies which are raising funds, because now funds would be tempted to put in their money, because it is part of an index and it has a weightage there, and they will have to map the index for the portfolios.
All right, now HDFC Bank's weightage has also gone up. Can you explain why the street is so disappointed, because the stock did fall today?
So, the entire genesis of this lies in the pre-HDFC Bank merger. Both HDFC and HDFC Bank are companies where there is no identifiable promoters as such. So the free float is more or less 100% in that sense, and foreign investors had a bigger role, bigger stake in these companies. When the merger happened, it created such a big conglomerate that the weightage threatened the index volatility. So what MSCI did was that at that time, instead of clubbing the thing, they said we will take only 50% of the weightage which is coming as part of the merged entity, and remaining we will do it over a period of time. What further happened is that HDFC Bank now has a foreign ownership limit of 74%, that which basically means that foreigners cannot hold more than 74% in the bank. The 0.5% which MSCI put reduced the limit to 0.37. Now, what has happened is that now it has taken from 0.37 to 0.5 to 0.5 to 0.75, which basically means taking the entire stake to up to 51% or so. And in the next half, when it does in November, it will take it to 75% of the foreign ownership limit there. The street was expecting that it will happen in one go. 0.5 to 1 will happen in one go, which would lead to a fund flow of roughly 2 to 3 billion only for HDFC Bank. Now it's not going to happen. They were expecting $4 billion of fund flow coming into HDFC Bank because of this. Now it's going to be only 1.8. So there was a lot of positions that got built in before the MSCI review, and that we saw some kind of selling coming in because it was not in one go, which is there. So it's a short-term sale which is happening from some of the investors which are taking positions, but it was a disappointing from that. Overall, if you look at how the entire MSCI review has played out for India, we are expecting roughly between 2.7 to $3 billion of money of foreign flows coming into India because of the various weightages which have gone up. New inclusions, there are 7 inclusions and 1 deletion which has happened at the top level, but a lot of new companies which came into IPO market have now come in, and a lot of fundraising that has happened has increased the weightages of foreign investors in these companies. So 2.7 to $3 billion is the estimated flow that may come in over a period of next 10 to 15 days, because this review will be effective from August 30th.
All right, Sajeet, thank you very much for explaining that in great detail to us.
Thank you.
In fact, let's also listen into comments that we have been getting on this.
Definitely, MSCI must have decided this thing to be done. They have not waited for another Hindenburg report to come. So I don't really see this is a correlation between Hindenburg second report and what MSCI has done. But what I read is that it is a very welcome kind of move, because you cannot depend on any foreign agency writing a report on something, and MSCI is taking a stand on that. So I don't really see that playing out well.
In fact, with that, it's time for a very short break. On the other side, we bring you a special conversation with Mohandas Pai of Aaron Capital on the Hindenburg hit job. Stay with us.
Hello and welcome to NDTV Profit. We are focusing on the continuing big story coverage that Profit has been bringing to you. The failed attempt of Hindenburg to discredit our credible institutions are in focus. This is something they have made one more attempt at, and the markets completely shut off. But there are bigger questions beyond the markets. To get a perspective on this, we are joined by Mr. TV Mohandas Pai, Chairman, RVNL Capital. Mr. Pai, welcome to the show. You have made some strong observations in your tweet. What do you think of this attempt to discredit our credible institutions?
Well, look, you have to go back in history. Remember, George Soros made a statement at Davos last year, where he said, Modi will have to answer about Hindenburg in parliament. Now, why should George Soros, who has got nothing to do with this country, make the statement? It's obvious that he has funded Hindenburg. He's the beneficiary. We don't know. And he's funded a lot of NGOs. He's been attacking Prime Minister Modi because he wants to change the government for many years. And there's a culmination. Have you heard of any such financier globally making a statement that so-and-so Prime Minister will have to answer Parliament? Who the hell is he? Now, that is the big issue. So then you have this Hindenburg make a report. What is the report? Regurgitating all past matters, putting it together, creating fear, making all kind of allegations. And that allegation led to the Adani stocks coming down. Well, they were highly priced at that point of time and going in one direction. So something had to give, and it gave. But nevertheless, it created a furor. And who started creating the furor? Well, the political parties, the NGOs, the lawyers who did all that. They went to the Supreme Court. Supreme Court in wisdom set up a committee of eminent citizens who then oversaw an investigation by SEBI. SEBI, after taking a lot of time to do a detailed investigation, gave a report. The report was looked at by the committee, then went to Supreme Court, and Supreme Court said, okay, investigation over, please carry out a job. So there was nothing there that that needed any action from SEBI, and whatever action SEBI is taking. Then they send a notice to Hindenburg. After the notice went, this rubbish comes into play. Because instead of acting that notice, they're throwing mud at the chairperson of SEBI and taking action. They're trying to destroy the credibility of SEBI in the market. And again, when that happens, who are the people siding with Hindenburg without reading the silly report? The same political parties, same kind of lawyers, same kind of NGOs. So you can understand there's a conspiracy led by George Soros and the Soros gang and all the contaminated Lutyens Delhi and contaminated NGOs to work for a political change, like you've seen in Bangladesh. Now the whole thing becomes very clear. The whole thing becomes clear what they're trying to do. And that's why we Indians who love our country, stand up for the country, should all wake up and fight this battle and correct this fake narrative and expose these people.
Right. So let's get to the facts here. Very clearly, instead of responding, as you rightly said, to the notice as a matter of decent practice, they are targeting the very institution that has sent the notice. Now, now the question here is, so they have dug up some bits and pieces here and there to say that, look, there is conflict of interest. Now, SEBI came out and said that there is no conflict of interest. She made all the disclosures before she joined. And the second point, SEBI also warned investors not to fall for this short sellers moves. So, about this disclosure, I think you would have also seen how SEBI has grown and regulated our markets, and in the past few months, some tremendous efforts have been done to clean up our stock markets, of, let's say, grey market operators and things like that. And we have come a long way. What are your thoughts on the disclosure aspect? Do regulators have to disclose? What should they disclose? That's a larger issue, and that is what they touched upon. What are your views on this?
Look, as far as I know, a senior person who's an ED or above will have to disclose all their assets and liability to SEBI. I'm sure the chairperson has done that, and the chairperson has said that. Now, here is what the fun is. When you disclose, what do you disclose? Your statement of asset and liabilities. When you disclose statement of asset and liabilities, nothing about the past, because you don't have any investment in that fund. You make the investment in the fund when you're overseas. You are not a part of SEBI, right? And you sold it, you redeemed it. And it is a very small investment of $890,000 on 48 million. And then 360 comes and says, that the fund had no investment in Adani company. So what is the issue? There's no conflict. And even if the fund had investment in Adani, so what? The fund was redeemed and you got your money back. Then you joined SEBI. Then you gave a disclosure as ED. Then you went on giving annual disclosure, whatever it is. Then you gave a disclosure chairperson. So where is the disclosure issue? There is no disclosure issue because you disclosed to SEBI. Having disclosed to SEBI, do you go back 100 years? No. You disclose what is there today. Now we have lawyers saying, oh, they should have disclosed to SEBI. Disclose to SEBI what? They'll give the current disclosure. They'll give the disclosure when they join SEBI. And there'll be nothing there to say that they had any investment in the fund outside because it's redeemed. So what is the big issue? When you become an MP, you make a disclosure. You give the assets and liabilities. You don't go back. You say, these are all my assets and liabilities today. If you are a judge, you're supposed to give it in the High Court. Supreme Court sadly does not give it. And you will disclose, these are all the assets today. When I joined the Supreme Court, I became a judge or whatever it is, right? And that, I had in the past, you don't have in the past. Because these are not these are investments. Investment you make to earn returns, right? And you know how much return you got to. Because if you are a judge and you have advised somebody 5 years earlier and the same person comes, then you have a conflict of interest. Here is an investment. And the investment is not made by you directly. It's made through a fund. You have no control over the fund. The fund manager makes the investment, right? You don't sit day and day and tell the fund manager that you take my permission because that's not required. And you have redeemed it. So, the whole thing is a bogus, rubbish argument. But what I'm astonished is, so many well-known lawyers are saying, oh, conflict of interest. She should have filed it with SEBI. File is Supreme Court. File what is Supreme Court? You'll file statement showing assets and liabilities on the day. On the day it is not there. You'll file showing what it was when you joined SEBI. It is not there. You'll show when you became chairperson. It is not there. Even if you have to show. It is not there. So what are you going to show? And even if you filed it, what will the court do?
Exactly.
What will the court do? I mean, this is so specious and so stupid. I'm astonished it's taking up so much of time of so many people. And I'm seeing some silly journalists write big articles saying, oh, there's that conflict of interest should not be there. But where is the conflict? Nobody has said what is the conflict, where is the conflict for anybody to understand.
Right. So you made an important point about conflict if there is a current situation, and I think in our country, in the judiciary and among the regulators, there is this well-established good governance practice of recusing oneself if there is a conflict. In fact, SEBI's clarification also pointed this out. I mean, this is something which we need to highlight. I don't remember, maybe correct me if I'm wrong, I don't know of an instance where a judge or a regulator has sat in judgment on an issue where there is a conflict of interest.
Yeah, the judges declare there's a conflict of interest and they withdraw, and that's a very normal practice, and we all trust the judges. Now here also the chairperson said that she's recused in some case. That is fine, accept it what it is. See, what we need in this country, we need an institutional mechanism whereby a joint parliamentary committee, like the Public Affairs Committee or the Finance Committee, sits down and hears all the regulators twice a year, and they come and give testimony. And in case something like this happens, they should have a meeting and call the regulator and say, hey, here are questions asked, please give an answer. And it should be in open court. It will be open court under camera so that everybody knows about it. So all these fake narratives and attempts to throw mud goes away, because transparency is the best antidote for all this. And there has been transparency here, because people are saying, oh, you should have put up your assets and liability statement in public. There's no such rule. There's no such rule for the regulator. Okay, put the rule. Make the rule. It's fine. Let Parliament decide, make the rule. It's okay. But there's no such rule. When there's no such rule, you say you should have done it voluntarily for what reason? Nobody does it, right? Because these are all private affairs. You file with the regulator, and the compliance option, the regulator looks at it and say, as per the compliance norm, it's okay. I mean, they've done all that. That is a market mechanism. And the market has responded by saying it's all rubbish.
Right. So an important point here is that, over the last 3-4 years, post-COVID especially, I would say, India has made a phenomenal progress. Now, the only way you can derail this is by creating panic and chaos in the market so that fundraising becomes difficult and it comes in the way.
I won't go for this conspiracy theory very much because, look, investors globally know what is India. They've been following India for 25, 30 years. They have put in $800 billion of valuation. They put in $600 billion of private equity and venture. So they know what is India. They've got deep roots in India. They understand everything. They will also invest in every Adani company. Adani can easily raise capital. So all this frivolous argument by the thinking by people like Hindenburg and George Soros, oh, it will destroy corporates, all frivolous. I mean, shows the weakness of the mind and the weakness of the thinking. Because investors, foreign investors, when they come, they meet people, they look at data, they look at analyst report and invest. They don't go by people like Hindenburg. Hindenburg is not a credible person globally. He's a vulture fund. He's a short seller. They create fake narratives. They've been hauled up by regulators. They created a fake narrative in Nigeria for a Nigerian company and think they lost their shut, right? And then nobody, George Soros and others have no credibility. And the lawyers and all are jumping up and down in India have no credibility among investors. So whatever they do, no. So I won't say all that, but I would say that any such attempt to hit at regulators without data, without evidence, should be resisted. And that is the big point, so that nobody will try to do it. Now, if you've got any data, you've got evidence, place it, that's fine. I mean, all of us will say that, look, let there be an inquiry, right? We want transparent markets. So this is a fake attempt to do it. But I won't carry that argument and conspiracy that, oh, investors will fall and all that. Because look, we have got $550 billion valuation companies. Most of them are well researched. Most of them have got foreign investment or Indian investors. We got thousands of analysts. We got so much of information in the market. We got very good corporate governance in this country, very well run companies. We've been in the global market for 25, 30 years, right? People have been following. Now, if there's some stupid editorials in New York Times or something writing some rubbish, that's fine because everybody knows they write rubbish. So nobody pays any heed to them. So I won't go that far. I've just said this education, but what I'm worried is, why are the political parties and some lawyers in this country getting carried away by this fake narrative? Are they part of Hindenburg and the George Soros network and trying to create chaos in the country by running such fake narratives? They've fallen flat on their face in this issue because that is what worries me.
Right. So that's a very important question. The opposition leaders have to look at institutions that have been built not just by the present government. Both the governments, both the opposition parties. Let's go back to 92 Harshad Mehta scam. What happened at that time? We had a serious crisis in this country. The regulators were questioned. There were no systems in place. We had a JPC. From there, we have come a long way to build these institutions. The opposition has also played a role. But today, when it comes to a situation, they are asking for a JPC. Yes, do a JPC. But before doing a JPC, probe into it. What's your take on that?
JPC is a frivolous argument for political reasons. I don't think anybody pays any heed to that because they're silly. This is not like 92. 92 was a market failure and manipulation happened, but the evidence was very strong. How money was diverted and there was no regulator at that point of time, right? It was free for all. And we know that Badla, Gidla, all that thing happened and how they were manipulated. SBI's money was taken off. SBI wrote off some 850 crores, blah, blah, blah. We know all the story, right? How it happened. There's nothing like that here. Here, what is the issue? It's just a frivolous argument. Oh, you heard Adani, you gave a report. The report was given after 18 months or 15 months. The report was very elaborate, lot of data. The report was seen by a very important committee that it went to Supreme Court. In the Supreme Court, based on the report, lawyers argued both sides and the arguments were heard. Then only the Supreme Court decided. When so many things have happened, what is the big issue?
Absolutely right, Mr. Pai. Thanks for joining us and giving us your insights on why such false narrative cannot shake the confidence in the markets and in the credible institutions of the country. Thanks for watching us. Thank you again.